Silicon Valley has long been considered the epicenter of innovation and economic growth in the United States. But on Friday, it experienced a devastating economic failure that even a sign of the times in California couldn't fix. As the world watches, billionaire investor Bill Ackman has stepped up and said that the U.S. government's action to financially protect depositors after the collapse of Silicon Valley Bank is not a bailout but rather an important step to help restore confidence in the banking system. At the heart of the issue is Silicon Valley Bank, a key bank for startups and other venture-backed companies. Over the weekend, a number of government-backed bailouts were announced to stimulate the failing banking system, but not everyone agrees with the move. Peter Schiff, chief economist and global strategist at Euro-Pacific Capital, says that this bailout means depositors will put their money in the riskiest banks and get paid higher interest and essentially lead other banks to take on greater levels of risk in the long run. To combat the issues of contagion and systemic risk, the Federal Reserve announced its new bank term funding program aimed at safeguarding these financially unstable institutions. Though the exact terms of the bailout have not been released yet, the statement issued by the Federal Reserve, Treasury Department and FDIC made clear that there would be no taxpayer costs associated with any of the new plans. Backing these statements was Joe Biden, who said he was firmly committed to holding those responsible for this mess accountable. However, veteran bank analyst Dick Bove cautions that this is only the beginning for the banking industry, which currently faces the loss of faith from depositors and investors alike. He believes that accounting practices for banks are totally unacceptable, and that banks are using them to show earnings and capital when they don't truly exist. Despite any controversies in regards to the government intervention and its effects, Bill Ackman's comments make it clear that this was an essential move to protect American citizens, businesses and the banking system. His insight and strong words are sure to help inspire confidence throughout the country in a very trying time. Looking forward, the U.S. government is taking active steps in shoring up the banking institutions and restoring the public's faith in the financial system. In a statement, Fed Chair Jerome Powell, Treasury Secretary Janet Yellen and FDIC Chair Martin Grunberg said that they will continue to find ways to protect the economy and strengthen public confidence in the banking system. At the end of the day, regulations, legislation and bailouts can only do so much. It's going to take time, trust, and financial responsibility to turn the Silicon Valley Bank disaster around. In the meantime, let's hope that this all serves as a lesson to the banking industry to be more responsibly managed, and that it won't happen again.